notes for that. The first working note was how to compute the adjusted annual turnover. What is adjusted annual turnover? It is nothing but we have the annual turnover. You plus or minus the trend for that, the plus or minus the increasing or decreasing trend in the sales expected. You get the adjusted annual turnover, and in that you will be computing the GP percentage. Okay, and computation of GP percentage will be another step. We also had a formula for computing GP percentage. What was that? It was like net profit plus interest standing charges whole divided by turnover into 100. That was it. Okay. And the third one, like what is the increase in turnover because of this additional expense? And because of that, what is the profit? What is the GP percentage on the increased turnover? This was the third step. Okay. So we compare all these three and we take the least of that, and hence we get the actual additional expense. And step 3 is actually a combination of step 1 and step 2, wherein you will be taking the GP on short sales, and the second, along with that, you will be adding the additional expense. And if there is any savings in the additional expense, you will be reducing that. Okay, so that you get the claim before average clause. And to this, you apply the average clause. And which is a situation where you apply average clause? Only when do you have to apply? Everyone? Okay, when do you apply average clause? Only when the policy amount is lower than the insurable amount. Okay, so the policy that you have taken is for a lesser amount, then you apply average clause, and we get the final claim amount. Okay, so we did a few questions based on that, and that was it. And yesterday we were actually doing a question where we clubbed both loss of stock and loss of profit. Okay, so loss of stock part we already discussed with. And next we are dealing with the loss of profit session. All right. So even in the loss of profit session, we actually did started with the process. Okay, like the few steps we covered with few steps. So it's like I guess it's visible there. Okay. So we were into the process of computing the loss of profit. Okay. All right. So our step 1, just listen everyone, and I'll give you ample time to take this down. Okay. Step 1, computation of short sales. All right. Okay. First one was what is the standard turnover. Okay. So now listen. The standard turnover, as we discussed in the yesterday's class, what is the disrupted period? Exactly the same turnover of the same previous year is what we need. So as we did in the previous year 2001, the last 9 months turnover is 7,82,609. All right, it is 7,82,609 is the turnover for the next last 9 months. And we obviously know that the current year fire, it occurred in the period. The current year's fire was, or rather the disrupted period was from 1/4/2002 to 30th of June 2002. Yes or no? From 1/4/2002 to 30th of June 2002 was the disrupted period. And henceforth, listen, for the next 9 months, or rather 7,82,609 will be covered in this one. Okay. 1/4/2002 to 36 2002 will be covered in this last 9 months. So we'll have to take a proportionate of this. So our standard turnover will be 7,82,609 into 3/9, because that 7,82 is relating to a 9 month period. So we need a 3 months turnover. So 7,82,609 into 3/9, you will get the short sales. Rather the standard turnover. So just use your calculators. 2,60,870 will be your standard turnover. Okay. And to that, you add the increased percentage, the 15% increase that you expect. So how much is that? Use your calculators and give me a message. 15% increase. Calculators, yes. Everybody give me the answer. Use your calculators and get me that. Message the answers. Ria, just sound like 82609 into 3 by 9. Yes. Okay, yeah. Yes. Ria, Anandu, everyone, yes, 39,130. Exactly correct. As the increased percentage. So the adjusted standard turnover will be 3 lakh. All right. And to this, what do? We reduce the actual turnover. Okay. Which you can get from the question 87,500 as the adjusted turnover. The actual turnover. We have already marked in yesterday's question 87,500 as the actual turnover. So we reduce that so that you get your shop sales. Okay. So if we had taken the first 3 months of previous year as 2,50,000, then the entire calculation would go wrong. Because if we take 2,50,000 for the first 3 months, then for the next 9 months it will be 7,50,000. And if it was 7,50,000, based on which your standard turnover proportion will also change. Okay, so that is the reason why we had to take extra care to compute what exactly is the previous year's first 3 months turnover and the next 9 months turnover. All right. So do one thing, everyone. Just take this down, compute the short sales part, and then we'll proceed with. And after you're done, give me a message regarding that. Okay. Done. Okay. You got it. Yes, Devika, Riya, Saurabh, Anandu. All good, all cool. George, Preena, Anu, everybody in the loop. Okay, Thomas, Joel, Varun. Okay, yes, great. So we'll continue with the next step. Step 1, we have done with. Now, what about the next step? Step 2 is computation of additional expense. Okay, so step 2, additional expense. And for computing additional expense, we know that we'll have to take 3 steps. We have 3 steps in that, and we'll be taking the least of 3. Okay, so step 2, additional expense. It is least of the first one. What is the actual additional expense? Which we'll be filling it up. Okay, actual additional expense. And the second one is a formula based one. I'll just write down the formula, and the rest you will be doing. Okay, so it is actual additional expense into GPAT whole divided by GPAT plus uninsured standing charges. So here I'll be expecting 2 answers from your end. There is a sub for this. The first answer that I want will be how much is the GP percentage, and the second one that I want will be adjusted annual turnover. Okay, I need all these answers. And third one will be what is the GPAT? Okay, you just have to apply the GP percentage on adjusted annual turnover so that you get your GPAT. Okay, these are the things that you need. And remember, everyone, you cannot take GP percentage of 20 that we got in the previous answer. Okay, you will have to specifically compute the GP percentage. Is that okay? The GP percentage, because listen, the reason being, when we are doing it in the loss of profit policy, we'll also have to be cautious about the insured standing charges. Okay, the insured standing charges will also be we can claim that also from the insurance company, and henceforth the previous GP percentage which you computed using GP by sales into 100, you cannot use that. Instead, you will have to use this formula that we learned yesterday. So, what was the formula? It was nothing but net profit plus insured standing charges whole divided by turnover into 100. Okay, I guess the point is clear why we are applying this formula. Even though we have computed GP percentage, okay, in the previous one, again you will have to recompute it because the insurance claim also needs to be covered, or the insured standing charges will also have to be covered. Okay, so okay, GP percentage, everybody has come up with the answer. Yes, 5%. Good going. Good going. It is 5%. Okay, GP percentage is 5. Yes, good. Shruti, Ria. Next, what about the adjusted annual turnover? Okay, adjusted annual turnover. Keep a note. It is exactly 1 year before the date of fire. Okay, exactly 1 year before date of fire. Come up with answers. Adjusted annual turnover. Okay, so the actual 60,000, and yes, use your calculator. The adjusted annual turnover. Yes, should the answers. Shruti, Preena, Ria, Anu, Bagan, where are others? 11.5 lakhs is the adjusted annual turnover. Harshita, okay. Yes, good. 11 lakh 50,000 is the adjusted annual turnover. Good, Harshita. Anandu, Shruti, yes. Devika, all in track. Ria, yes. Everybody, take your time and do that. Okay, relax. Bagan, Joel. Joel, I guess I missed you yesterday. Were you in the class, Joel, yesterday? Preena, Anu, Bagan, George. Okay. Everybody has come up with answers or what? Huh. Okay. Fine, Joel. Okay. So we computed GP percentage, which is 5%. We also have adjusted annual turnover, which is 11 lakh 50,000. Now, what is a big deal to compute GPAT, right? 11 lakh 50,000 into 5%, you get GPAT. So give me the answer. Yes, Shruti, it is 57,500. Exactly. So you get GPAT as 57,500. Everybody, try doing this. Okay. If any doubt, if anyone is facing any difficulty, please raise your hands. Not an issue. Okay. Raise your hands. Give me the answer for that. All right. So you get GPAT as 57,500. Yes. Good going. Sabrab, Harshita, and Anandu, Ria. Okay. So GPAT as 57,500. Cool. So, and then you will have to apply that in the second formula. Okay. Okay. All right. Okay. Uninsured standing charges. Okay. In order to compute the formula, I guess we have already done that. The second, uninsured standing charges. Okay. Yes. I'll tell you, there is a point. Yes, Harshita. Everybody, just listen here for uninsured standing charges. See, in the question, it is not clearly mentioned how much is the uninsured standing charges. So, how do we compute? Listen, it is just this much. You take your trading P&L. Okay, you take your trading P&L. From the trading P&L, we know what is standing charge. Yes or no? We know what is standing charge. Standing charge is nothing but the fixed charges. So standing charge, see, listen, we have 1 lakh finance charge, which is fixed. Selling expenses, it varies based on the sales. So you cannot treat that as a fixed charge. It is instead a variable cost. So finance charge of 1 lakh, and then when we come to this administrative expenses, it is also not going to change on a regular basis. So we have administrative expenses, which is 50,000, and that's it. Okay. So our total standing charge. Okay, you need a clarity here. All right. Your total standing charge, which is nothing but administrative expenses plus we had one more finance charge. Okay, finance charge of 1 lakh and 80,000 happening to be 1,80,000. So our total standing charge is 1,80,000, and of which we have both insured part and uninsured part. Okay. And the insured standing charges is given in the question as 50,000. Okay. So the uninsured standing charge happens to be 1,30,000. All right. So listen, everybody. The total standing charge, or rather the uninsured standing charge, is not clearly given in the question, but we have all ways to compute that. You just have to check your trading P&L, analyze it for the fixed and variable expenses. We see that we have, see, what are the different expenses in the trading account? We have purchases, manufacturing expenses, all that are variable, and administrative expenses, it is fixed because the expenses that we give to our CAs, the CS, etc., which happens to be fixed. And then we have the selling expenses, which is purely dependent on sales and hence it is variable. And then we have finance charge, which is the interest portion which we give to bank, which will also be fixed. Okay. So finance and administrative expenses together, we club it, we get the total standing charge. And from that, the insured standing charge is already given in the question. So the uninsured standing charge will be 1,30,000. So this will be an additional working note to your step 2. Okay. Everyone, take this additional working note to step 2. Okay, take this down, everyone. And then try computing the formula. Is that clear, Harshita? Yes. Good, good. Others, everybody, is everyone in track? Is everyone in track? Keep messaging. Yes, Anu. Yes, Saurabh. Fine. Good. Okay, note this down. And once you are done with this, let me know. Give a message, drop a message. Okay. 18.4 lakh is Okay, 1 lakh 18,400. All right. Okay, fine. Good. 18,400. Okay, 18,400. Good, George, Anandu, Ria, Alina, Bagan. Everyone. Joel, yes, 18,400. Prina, Thomas. Yes, okay. That is good. So we have just one more step. Listen, don't start writing, everyone. I'll just complete this up and then we'll see to that. Okay. So the point C, as we know, there are three sub points in step two. So first one we have done, which is the actual additional expense of 60,000. Straight away we can pull it from the question. Point B, we have applied the formula, and point C, as I said before, there are two assumptions possible. We discussed it in the yesterday's class. Two assumptions. What were they? One was either we can assume if the question does not give much clarity, either we can assume that the entire sales is out of this additional expense, or you can assume that the question is short of clarity and will be taking it as the data is not sufficient. So yesterday we did one question based on the second assumption. Now let me take it with the other assumption as well. For exams, both ways perfectly fine. Okay, yes, there will be a slight change with respect to the assumption that you take. Not an issue. You just have to note down the assumption, but be very careful. You definitely have to note down the assumption. Okay, and if you write down the assumption, whichever way you have taken it, it is perfectly fine. So here I'm assuming that the entire sales is out of the additional expenses. Okay, so assumption entire sales is out of additional expense. All right. So for point C, you get the what was the additional expense? We know from the question the actual expense incurred was 60,000, or rather the actual sales, actual turnover, what is 87,500, and on that you apply the GP percentage of 5%, which you computed before. So you get the answer as 4375. Okay. So to sum up step two, we have three figures in picture. One is 60,000, the other one is 18,400, and next one is 4,375, which of which you will be taking the least. So which is the one that you will be coming up with? 4,375 will be the answer which we come up. Okay, so this is step two. So just compute this, everyone. Okay, 4375. Right. Once you're done, give me a message. And any doubts, please do post. Okay, summary of step two. Okay, Anandu, good. Done. Shruti, Ria, Donna, Bagan, Thomas, Reena, Varun, Saurav, George, Harshita, all in loop. Good. Okay, I know. Yes, you have a query. It is given that the sales for that period was severely affected. Okay. Yes, exactly the same. We have done the same assumption. We have assumed that the entire sales was because of additional expense, and henceforth we took the actual expense, which is 87,500. Okay. 57,500 into 5%. Okay. We can't take the other assumption because see, I know it is not clearly specified in the question that it was only because of this additional expense this sales is incurred. Okay, so it is better to follow this and not the other one. All right. Even if you take the other one, it is fine provided you give a note. That's it. Because it does not say. See, just in the second question that we did yesterday, it clearly said up to 55,000 was normal turnover, and above that was additional turnover. Nothing of that kind is mentioned in this question. Okay. So A, the assumptions are perfectly fine. Okay, good. Good, Anu. All right. All others done with this? Okay. All right. So we'll proceed with our step 3, which is the final step. Okay, step 3. What was that? We compute the claim amount. Okay, so how do we compute that? First, GP percentage on short sales. So we have computed the short sales before as 2 lakh 20. Short sales was 2,12,500, and on that you apply your 5%. You get that, and then it is additional expense. Okay, which is 4,375, and then we have the claim for loss of profit. Come up with the answer. Shoot the answers, everyone. 15,000. Anu, Shruti, yes, good. Harshita, Donna. $15,000. Joel Bagan, George. Good going. Now, everybody, this is before average clause, right? You tell me whether we have to apply average clause in this question or not. Okay, use your mind. Process. We do. Okay. Yes. Haha. Good. 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 Yes, we don't have to apply average clause in this question. Why? Because the insurable amount, which is nothing but the GPAT, is 57,500, whereas the policy amount, how much is the policy amount? We have marked it yesterday. The question, what was the policy amount? It was 1 lakh. 1 lakh was the policy amount. We did that in yesterday's question. So policy amount was 1 lakh. So it happens to be, okay, the insurable amount is lower than the policy amount. So this is lower than policy amount, and hence you don't have to apply average clause. Average clause is not applicable. Okay. Good. Is any points not clear? Do this assumption notes also. Okay. Keep up this writings also. Without these write-ups, you will not be awarded marks. Okay. Do that. And once you're done, give me a message. Drop a message. Done. Okay, Donna, Shruti, Anu, Alina, Harshita. Good. Devika, Saurav, Joel, Varun. Yes, Bhagan. Good. Anyone who has not yet completed, please drop a message. And even if anyone has not messaged, also drop a message. Let me know what is happening at your end as well. Okay. And any topic, if I have to clarify any topic which is not clear, please do message. I'll repeat that again. Not an issue. It is never an issue. So feel free to ask any questions, any doubts, any points not clear. Okay, good. So that's for the this question, and this is also done with. So now we'll move on to the next question, right? Okay. All right. So to sum up with this question, listen. In this question, so what was the additional adjustment that we did? There was only one additional adjustment actually. We had to compare the previous year's turnover and the current year's turnover because in the previous year, the first 3 months, if we assume that sales is evenly spread throughout the year, the first 3 months previous year turnover will be 2,50,000, whereas that is not the correct assumption because clearly it is given in the question that there is a 15% increase and also in the current year first 3 months turnover is 2,50,000. So definitely the previous year's first 3 months turnover cannot be 2,50,000. Okay. So we had to apply a reverse calculation. We took previous year's turnover as X. We added a 15% increase plus 15% X. You get 2,50,000. So we did a reverse calculation and we got what is the first 3 months turnover in the previous year. And then the usual scenario. Okay, this is the additional adjustment. All other steps are exactly the same. Short sales, additional expenses, and finally we compute the claim. These are the only 3 steps when we are dealing with loss of profit. Nothing more, nothing less. Okay, good. So that's what this question. Shall we move to the next? Everyone in track, in loop. Can loss on stock can be claimed? Can loss on stock? Obviously, yes. Yes, we computed that yesterday, right? Loss of stock can also definitely be claimed. We can claim both. Loss of stock can also be claimed, and even loss of profit can also be claimed. Loss of stock we computed using the memorandum trading account. We computed closing stock. You reduce salvage value, so that you got your loss of stock. That can also be claimed, and loss of profit is nothing but a consequential loss. Definitely, that can also be done. Okay, both can be claimed. All right. Yes, is that clear? Any further clarification received? Okay, fine, perfect. Okay, good going. All right. I guess everyone is in loop, and this question is perfectly fine with everyone. Shall we move to the next? Yes. Come on, respond. Okay, right after lunch. Okay, yes, good. Preena, Varun, Alina, yes, I guess we can proceed. Joel. All right. So we'll move up with the next question. Okay. So it is from your practical question. Okay, it is from your practical question and the last one, question number 6. Practical question number 6. It is page number 10.40. Okay. All right. So we'll go with the next question. All right. Question number 6 of our practical question. Good. Let's start. Have power, have energy. Listen. Monalzi and Company runs plastic goods shop Following details are available from the quarterly sales tax returns filed. See, here the only issue is, see, every question that we are dealing has a different adjustment. Okay, so here they have split and they've given different years turnover, and they have also for 1 year they have split into new 4 quarters: Jan, Feb, March, April, May, June, and similarly they have split the total turnover of 1 year into 4 quarters. They've given the split data, okay, of 4 years. Let's see why 4 years data and all is required in the previous, in the questions that we have done so far. We didn't have 4 years data and all. Let's see why that is there. We'll see to that. And yes, back to that. Okay, period and amount. Sales from 16/9/2003 to 30/9/2003. Okay, hold on a second. Okay. Okay. The sales from 16/9/2003 to 30/9/2003 is 34,000. Actually, they have not yet mentioned the date of file. Let's see if it is coming up. Sales from 16/9 to 30/9/2003 is 34,000. 16/9/2004 to 30/9/2004. This probably will be the disrupted period because the turnover happens to be nil. Okay. Let's see, from 16/9/2004 to 30/9/2004. Okay. Okay. Listen. Okay. 16/9/2004, because you see that the turnover is nil, so probably that will be the disrupted period. All right. Let's see for that. Nil. So this has to be the disrupted period. Okay. Now 16/12/2003 to 31/12/2003 is given as 60,000. And here sales from 16/12. Let's see where we can use that. We'll just read the theory part in that. A loss of profit policy. Okay, so we have data coming up here. The policy amount. Okay, the policy amount, which is your working note 1 basic data. Working note 1 basic data. Your policy amount happens to be 1 lakh. Okay, we'll mark it in the question as well. Okay, 1 lakh is the policy amount. See everyone, the fire occurred on 15th September 2004. So our assumption earlier was correct, which is the date of fire. Okay, date of fire is 15th September 2004. Date of fire. Period of indemnity period was 3 months. Okay, 3 months was the indemnity period. Fine. Net profit 1,20,000. Standing charges all insured. We don't have any uninsured standing charges. 43,990 for the year ended 31st December 2003. So listen, 15th September, or I'll write it up. 15th September 2004 is the date of fire, and they say that 3 months is the indemnity period. Okay, as discussed yesterday, if the question does not say for how many period business was disrupted, obviously you will have to go with the indemnity period of 3 months. Okay, so 3 months, we'll assume that it is not actually an assumption because the question does not give any other data. So only possible way out will be 3 months will be the disrupted period. And that is the reason why we saw the turnover from 16/9 to 39 2004, or rather, sorry, you will have to count 3 months from that, 15 September. So October, November, December, up to 15th December 2004 will be the disrupted period. Okay, 3 months. So 15 September 2004 to 15 December 2004 will be your disrupted period. All right. So now back to our question. Okay. Everyone fine with me? All right. Is so much clear? Audio, video, is everything fine? Everything in track? All cool? Good? Yes, Shruti. Yes, yes, Ria, Thomas. Okay. So we'll continue with that. See, listen. Okay. So step one, computation of shop sales. Okay. All right. So what is the step? We'll have to compute the standard turnover. Listen, everyone, I'll compute this, and only after me doing it, you will be working it out. Okay. As discussed before, standard turnover will be exactly the previous year, the same period of the previous year. Okay, the disrupted period exactly we'll have to take that in the previous year. So listen, the disrupted period we have already mentioned. Or do one thing, students, as working out one basic data, just take this down. Okay, just take this down as working note one basic data, and afterwards we'll continue. And give me a message. Drop a message after this. This data is very important. Let me tell you, this data is very important because here you get confused with the dates. So once you don't get a correct clarity of the dates, you will not be able to proceed with. Okay, very important. Only the dates will confuse you here, nothing more. Okay, all of the adjustments we have seen. Okay, Anu, Anandu, all done. There we go. Okay, cool, good. Okay, so let's proceed with see. As I said, 15 September 2004 to 15 December 2004 is the disrupted period. So in order to compute the standard turnover, you just have to replace this 4 with 3. Okay, you just have to replace this 4 with 3. So the period here will be 15th September 2003 to 15th December 2003. Okay, so you will have to pull out the turnover for the spirit, and this is the task here. You check the question left, right, and center. You will not be able to get the turnover for the spirit. So how do we do that? Okay, we'll have to compute the spirit's turnover. We'll check up with the question and we'll see how it can be done. Okay, let's see. All right, this is what we need. Okay, so and we are dealing with 2003. So our focus is completely for the year 2003, and we'll see how we can sort it out. So we need it from 15 September. Now listen, 1st October to 31st December turnover is given to you. Okay, for the year 2003. Yes or no? 1st October to 31st December is given to you. So let me just mark it down. Okay, 1st October 2003 to 31st December 2003 is given to you. And the turnover happens to be of 1,90,000. 1,90,000. See, but our required period is 15th September. So listen, from here, it is marked 16th September 2003 to 30 September 2003. Data is given to you. So 16th September 2003 to 30th September 2003, data is given to you. 34,000 is the turnover for that period. Okay. Now what? 15th September, 30th September, 1st of October to 31st of December. But we don't need the turnover from 16th of December to 31st of December because, listen, be very alert, be very clear with this. the required data or the turnover we'll have to pull out from 15th September 2003 to 15th December. Here, when we took, it was till 31st of December. So the last 15 days turnover, you will have to just remove it. So it will be like, you will have to minus the turnover from 15th December 2003 to 31st of December 2003. And is that data given? Yes, obviously it is given. Listen, here we have the data for that as well. 60,000 is the data for that. So from this, you will have to reduce 60,000, okay, so that you get your short sales. Is that point clear, everyone? Okay, I'll take up a scale rather. Okay, so this is like 1st of October 2003 to 31st of, or rather, okay. So what we need is from 15th 15th of September. Okay, let me just note this down. 15th of September 2003 to 15th of December 2003 is our required period. So this is what is required for us. Okay, this is what is required, 15th September to 15th December. So from 1st of October, somewhere over here, we have 1st of October 2003, 1st of October to 31st of December 2003's data is given. 1st of October to 31st of December 2003's data is given to you. And from that, you will have to reduce the last portion. 16/12/2003 to 31/12/2003, you will have to reduce. That is what we have done over here. I have reduced it over here. Okay. And then, in order to complete the entire chart from 15th of September to 1st of October's data is also required. And that is what I have taken it up over here. All right, which is 34,000. Okay, so from 1st of October to 31st of December 2003, you have taken the last 3 months. From that, December's last 15 days is removed, and September's first 15 days you have taken up. So you add up all these three, you get the shop sales. Okay, so 1,90,000 plus 34,000 minus 60,000, you get what is called as your short sales. Everyone, just take this up, complete this computation of short sales. Okay, standard turnover, split up the data, or every period you will have to split up and then write it down. Okay, after completing, do let me know, keep messaging. Done, good. Everyone, I want a response from everyone. Keep messaging. And before that, understand, and only then you take this down. Don't just take it on a lighter note. Understand each and every point and then compute it. Give me the answers as well. Not just done. I want the answers as well. Yes. What is it? 1,64,000. Good. One lakh 64,000. Yes, good. Alina, Joel, George, Anandu. Okay. Everyone done? Yes. So we'll proceed with, listen. Now that you have computed short sales, okay, you know what a we have computed standard turnover. We have computed standard turnover. We just have computed standard turnovers. 1,64,000. And you will have to increase. Okay, here we have another point to deal with. Okay, standard turnover. You will have to do the trend adjustment. Okay, trend adjustment. We'll see, because the question here also does not tell us what exactly is the trend adjustment percentage. So you will have to we'll have to compute that. We'll see to that. Don't worry. And to this, you will be doing the actual turnover, right? So that you get your short sale. Simple. And this is just it. Now listen, we'll have to compute the trend, okay? What is the trend? Increasing or decreasing trend? It is not given straight in the question. So we'll have to compute that. How do we compute? Listen, and that is the reason why question has given you many years data. So back to our question, listen. See, from 2001 to 2002, from 6,20,000 to 7,13,000, 2002 to 2003, 7,13,000 to 8,19,950, but you cannot compare 2004 because this is the year where we had fire. So you cannot compare the 2004 data. You just have to take the data for 2001, 2002, and 2002 and 2003. So let's see how about the GP percentage, or rather the increase in trend, percentage increase in trend. Okay, we can do it either way. First, let's compare 2001 and 2002. Okay, we'll be comparing 2001 and 2002. So what we does is 7,13,000 minus 6,20,000. I hope everybody knows this formula, or I'll write this up again. See, to compute the variance, what was the turnover in the current year? What was the turnover in the previous year? So what we does is current year minus previous year whole divided by previous year, you get the variance percentage. Okay, what is the change? You get the variance percentage. Current year's turnover minus previous year's turnover whole divided by previous year's turnover, you get the variance percentage. So let's take it for 2001, 2002. It is like 7,13,000 minus 6,20,000 divided by 6,20,000, you get the increasing trend. Similar, yes, very good. 15 percentage, okay? Do it for 2002 and 2003. We can just verify if it is the same, okay? Do it for 2002 and 2003. We are comparing that 2 years. So the turnovers will be, okay, 8,19,950 minus 7,13,000 divided by 7,13,000, which happens to be again 15 percentage. So on an average, the company is having a 15 percentage increase in trend or increase in turnover. All right. So it was 100 in the previous year. It will be 15 more in the current year, and it will be 115. That is it. Okay. So we got the 15 percentage trend, increasing trend. You apply that and you compute the adjusted standard turnover. So 2002, 2003, although we compared and we got it as 15 percentage, and we have computed the adjusted standard turnover. All right. Now the next task is nothing but the actual turnover. Let's see how we can compute that. I think not a big deal. Okay, so we need actual turnover. So actual turnover, the period will be, if it was 2003, when we computed standard turnover here, it will be 2004. 1,28,000. Okay, 1,28,000 is the correct answer, Shruti. Good. Okay, 1,28,000 we'll see. Don't worry, others. I'll just break it up. Okay, actual turnover. Haha, Thomas, good. Fine. Give me some time. Let me also do that, okay? Actual turnover 1,28,000. Okay. You have come up with the short sales also 60,600. Oh God, this is amazing, students. Amazing. Okay. Anyways, okay. Just to make me happy, I'll just note it down just to see that every others, okay, all others are also in the track. I'll just note this down. Good. Anyways, okay. So the turnover will be from 16 September 2004 to 30th of September 2000. Sorry, it will be. It will be It will be 15th of December 2004. So for 2004, the last month's turnover will be given to you, which will be like uh, 1st of October 2004 to 31st of December 2004. Data is given as 1,48,000. From that, you will have to remove the last 15 days of December, 15th December 2004 to 31st of December 2004. You will have to remove that. It is given in the question as 20,000. And the first 15 months, 15 days of September, sorry, the last 15 days of September, you will have to add that, which is 15th of September 2004 to 30th of September 2004. You will have to add that. So that, and it is given in the question as nil. So it will be 1,28,000 as actual turnover. Okay. So standard turnover, you have come up with 1,88,600 and you have the actual turnover as 1,28,000. So you take the difference, you get the short sales as 6,600. Okay. That is it. So everyone, compute the actual turnover, compute the short sales also. Okay. Okay. Yes, good. Anu, Anandu, Donna, Madhura, Ria, Devika. Okay, Thomas, fine. All right. Yes, Joel, Varun, good. So that's it. So we have done with the step one. We have computed short sales as 60,600. Okay. Now over to the next step. What is the next step? What is the next step, everyone? What is the next step? Yes. Additional expense. Good. Thomas. Yes, yes, Ria. Okay, so the next step is additional expense. But surprisingly, does the question give you any clue regarding additional expense? Okay, is anywhere in the question said that they have incurred additional expense? Okay, is it said? Step two, respond here. Let's make it lively, not a one man show. Is anywhere in the nowhere it is said? Yes, good. Nowhere in the question we have the data regarding additional expense. So what we can assume, the only possible way out is that the company has not incurred any additional expense. They have not taken not much paying or things are done to take a building for rent. Okay, so that part is not done with. So step two. But what I want you to do is do that, write that additional expense. Okay, students, please don't forget, write the step. Even if the question does not give data regarding that, write that step. Okay, so that at least the evaluator, he'll know that you are aware of these steps involved. Step two, additional expense, and then you write a note. Okay, the question does not provide details regarding additional expense. Okay. and hence not computed. All right. Give this note, everyone. Okay. So once you send the pictures, your class notes through your WhatsApp, I'll be able to get an idea who all are properly taking up the notes as well. As I always say, I want the notes also to be really maintained well. Reason being, see, the only reason is you use those notes for your exam study purpose, right? If you just scribble it out, will you be able to, or will you actually feel like getting a hold or taking up that book and learning? Obviously, no. Including me, even I was not able to go through the notes which I had written. So I want everybody to do it properly, neatly. Use your scale, pencil, rubber, and highlighters. Do that, different color pens, different pencil, scale, everything, and make your notes colorful so that even for your exam purpose, you will be able to use this. I know you guys are good at that. Yes, I've seen that in classroom as well. Perfectly done. Keep that in this online classes also. Okay, don't miss on that. Do that here also. Okay, so step two, we are done with step two. Just this note, and we are done it. And then we have to come to step three. But yes, what we have to do is in step three, you will be needing our GP percentage. Okay, GP on short sales. Usually, our scenario was in step two, we'll be giving a working note to compute GP percentage and GP 80. So, here, what we can do is you leave some space for step three, maybe about 5 or 6 lines for step three, and then you write, okay, working notes. Let's just get done with that. Working notes. And the first one is GP percentage. We know the formula, right? NP plus insured standing charges whole divided by turnover. So net profit is given to you as 1,20,000 and 43,990 is the insured standing charges. 8,19,950. All these are relating to the previous year into 100. Okay. So you get it as. Give me the answer. Yes, shoot. GP percentage. Leave some space for step three and then start writing working notes. And working note number one, computation of GP percentage. Working note number one, 20 percentage. Yes, Shruti. Varun. Good. Working note number one, computation of GP percentage. Yes. Anandu, good going. Priya, 20 percentage. Yes. Anu, okay, GP percentage is 20. Good. Okay. Bargain, yes. All cool. Preena, okay. Yes, fine. So the next step will be GPAT. Okay, which is working note number two. Working note number two, okay. Working note number two, computation of GPAT. Okay. Computation of GPAT is working note number two. Let's see. See, GPAT, we know that it is exactly 1 year before the fire. So, our date of fire, here also we need to be careful. Listen, I'll work it out. Please hold on, everyone. Hold on. I'll work this out and then only you compare it, okay? Date of fire happens to be 16th of September 2004. So, what is the period for GPAT? It will be 16th of September 2013 to 16th of September 2014. Okay? Exactly 1 year before. 16th of September 2013 to 16th of September. Good, Harshita. You have come up with the years as well. Good. 16th September 2013 to 16th September 2014, or rather 15th September 2014 is the actual date. Okay, actual year. So now listen, I'm just splitting out the years. Okay, 16 September. Okay, maybe I'll change the color. Okay, yes. Okay, 16th September 2013 to 30th September 2013 you need. 1st of October 2013 to 31st of December 2013 you need. And then for 2014 we'll have to come up 1st of January 2014 to 31st of March 2014. And then we need from 1st of April 2014 to 30th of June 2014. Not done, still proceeding. 1st of July 2014, 30th of September 2014. Okay, this is the entire period, and from this you will have to remove the last 15 days of September. Okay, because we need the data only up to 16th of September. So from 16th to 30th of September, you will have to remove it out. 16 September 2014 to 30th September 2014, you will have to minus it up. Okay, so listen, this data, it is readily available in the question. We'll see if it is available. Okay, 16th of September 2003 to 30th of September 2003, we have that here, which is 34,000. Okay, 34,000. 1st of October 2013 to 31st of December 2013. Listen, here it is 2013 year, 1st of October. It is 1,90,000. Okay, and next it is. Okay, all right. Next, we are coming to 2004. We have 1st Jan to 31st of March. It is 1,62,000. And then April to June, it is 2,21,000. July to September, it is 1,75,000. Okay. And for the last, it is nil. 16th of September to 30th of September, it is nil. Clear on this? Okay. So back to our answer. So these are the figures. 16th September to 30th September, 1st of October to 31st of December, then to 2014. Okay. Yes, Ashida, turnover of last 15 days is 0, but still note it down, okay? Or else the valuer will not be convinced. Because initially we have written the date, so it in this manner. Okay. So now the next point to be noted is, I agree, if you take the total of this, you get the turnover. Okay, you get the annual turnover. But this annual turnover, you will have to apply the increasing trend. Listen, everyone. When you're applying the increasing trend, the point to be noted is 2004's turnover is already adjusted for trend. Okay, 2004's turnover is already adjusted for trend. We only have to apply the 15% increase in trend for 2003. Okay, so you will be applying plus 15% only for the first two. For the rest, you will not be applying 15% trend. Is that point clear? Only for the first two, you will be applying 15% trend, and for the rest, you will not be applying. So everyone start, use your calculators, compute this computation of GP percentage. Yes, and give me the final answer. What is the adjusted annual turnover? And afterwards, we'll be computing GPAT. Okay. We'll come up with adjusted annual turnover. Yes, shoot. 8,15,600. Good. As 8,15,600 as the adjusted annual turnover. You have come with GPAT as well. Shruti, good. 1,63,120. Fine. You guys are really fast, sir. Okay. 8,15,600. Others, take your time. Not an issue. Okay, not an issue. Take your time. Understand each and every concept. Write down each and every step. Understand it, and only then please don't copy it from your textbook as well. I know you have the question and answer nearby, but please don't do that. Okay, usually I don't allow you to open your textbooks, but this time I have no other way out other than to tell you. Don't open up your textbook and just copy it from that. No, please no. It is for your benefit, it is for you. You have to learn and so understand each and every step. Any doubts, feel free to ask. Okay? And let's see. Okay, 8 lakh 15, 16. Do that and post in the messages. Okay, everyone, let me know if you're done with it. And then if yes, we'll proceed. Okay, give me a message, post update. Okay, Thomas, Ria, Donna. Good, good. Bagan, Anandu, Anu. Devika, Varun. Good going, dears. Alina, Joel. It is just in a once in a blue moon that I see Joel. Keep responding, Joel. Madhuram. No, you have come up with claim as well. Good. 7430 is the claim amount. Good. Okay. Anyways, I'll come to that. Everyone, please complete till GP80 and we'll proceed with the others. Okay, just for the time being, let me know everyone is done with GP80. GP on short sales, which is okay. Yes, Harshita, perfect. Okay, I guess we can proceed with the rest. Okay, so final step 3, one is short sales. Sorry, it is GP percentage on short sales. GP on short sales, which is okay, GP on 6600 into 15 percentage. Okay, 6600 into, sorry, just 20 percentage. So you get it as 12,120. You don't have additional expense, but still write this up. Additional expense, you write it as nil. Okay, additional expense. This should be there in your step. Additional expense nil. GP percentage on short sales. 6600 into 20 percentage, which is 12,120. Additional expense is nil. Minus savings, which is 0. It is not given in the question. You get the claim before average clause, which is 12,120. Okay, and to this you apply average clause. Okay, so insurable amount is 1,63,120, whereas the policy amount is only 1 lakh. You are short of policy, so you will have to apply average clause. Apply average clause, which is 1 lakh divided by 1,63,120 into 12,120. And there you get the answer as 7,430. Okay. This is it. Everyone, complete this. 7,430 will be the final answer. Okay. I hope it's visible to everyone. Keep texting everyone once you're done with this. Okay. All good? All right. Okay, so there's anyone pending to complete this? Anyone? Joel, I guess I didn't get you done. Huh. Okay, everyone. Others all done? Anybody to complete? Okay. Yes, yes, all smooth. Thomas, Anandu, everyone done with it, I guess. Joel, Varun, Alina, Madhura, Ria, Donna, Preena, Devika, yes, Harshita, all cool. Good. Okay. So we are done with that question also. Now, a few more questions left. I guess it's time for a short break. Okay. So take 5 minutes break. Be back by 3. All right. So welcome back, everyone. Everyone in loop. Back after break. Text me. Text me. Have the Josh. Be in loop. Yes, good. Yes, Bhadra. Sabrav. Okay, so we have done almost everything from this. The concepts are most of the concepts are covered, and so now we'll do few past exam questions. So let's just test ourselves whether we'll be able to do the past exam questions. Okay, there you go. So, uh, all right, now you'll. I guess the notes 16 marks. Sorry, this was 16 marks. Mark it. Okay. See, these are the type of questions that come for exam, and let's see how easy it becomes for you to answer it because we have almost covered all the major concepts, and now maybe in these questions we'll be finding out few more adjustmets, etc. Maybe one or two, hardly. Okay. So all of the things are done. We'll see how well we are for our exams. Let's see tracking this. So good. Okay. So we'll read out the question as we did before. We'll read out the question. I'll mark out what is important. Okay, all the relevant points here and there. And then we'll start solving out. Listen. So Ramada and Sons had taken out policies without average clause. Okay, so without average clause, you don't have to apply that. Both against loss of stock and loss of profit. So we have both in the picture. We have loss of stock and loss of profit, just like the question which we did in the first question that we did today. Okay, so it is 2,10,000 and 3,20,000. Okay, so we have the first data coming in picture. 2,10,000 and 3,20,000 is the policy amount we have. Okay, that is the policy amount we have. A fire occurred on 1st July 2011. So this is the date of fire. Okay, date of fire we have. And as a result of which sales were seriously affected for a period of 3 months. 3 months is the disrupted period. Okay, this is the disrupted period. All right, disrupted period. Okay, and we have the trading P&L given to us. We have opening, purchases, things of that kind. Trading P&L for the year 31st March 2011. So they are following. They are not following the calendar year. They are following the April-March circle. Okay, 31st March 2011 is what they have closed their books previously. So that data is given. Sales we have closing stock, opening stock, purchases, wages, manufacturing expenses. You get your GP. And then in the P&L portion, you have the administrative expenses, selling expenses, which is fixed. We'll be needing that. Commission on sales carried outwards, and we get the net profit. That's about the trading P&L. Now the other details, okay? Sales, purchase, wages, and manufacturing expenses for the period 1 for 2011. Okay, 1 for 2011. Okay, let me take my marker. 1 for 2011 to 36 2011 where 3,36,000, 2,14,000, 51,000 and 12,000. So the 2011 the first 4 months, from April, March, and April, May, and June data is given to you. Okay, 2004, 2011, April, March, and April, May, June data, 3 months data is given to you. Sales, purchases, wages, manufacturing expenses. Why won't that be given? Why is that required? Anyone? Posted, no? Why is it required? Everybody, keep messaging, keep messaging. Why is that data given? From 1 for 2011 to 36 2011. See the date of file. It is 1st July 2011. Memorandum. Yes, exactly. We need to prepare the memorandum trading account, and that's the reason why these data is given from 1 for 2011 to yes, Anu, closing stock, which is nothing but we'll be preparing the memorandum account. Okay. So for that, we are given the data from 1st for 2011 to 36 because the date of file is 1st of July. And other sales figures are also provided. We'll see where we can use that. And due to decrease in material cost, GP was expected to increase by 5%. Okay. All right. So GP increase is 5%. 5% is the GP increase. Okay. GP percentage increase. was expected to increase on 5% on sales. 1,98,000 is the additional expense. Okay, additional expense it is 1,98,000. Amount of policy included. Listen, 1,56,000 for expenses, leaving 42,000 uncovered. Meaning, I'll just note this down as basic data. Only this point will be required. Working all others are very much clear. Working note 1, basic data. We'll be writing only this, which is the total additional expense is 1,98,000, of which 1,56,000 is covered, meaning that is insured. Insured standing charge. Okay. And then 42,000 is uninsured. All right. So total additional expenses 1,98,000, of which 1,56,000 is insured standing charges, and the balance 42,000 is uninsured standing charges. And then we have to compute claim for loss of stock, loss of profit, and additional expense. That's it. Okay. So everybody, take this down. Write down the basic data. Okay. Complete this basic data. And then post messages, post updates. Just this one will do. After you write this down, give me a message. Yes, Harshida, you had a question there. Okay. Okay, listen, it's just this. It's clearly given in the question that is the additional expenses incurred. Okay, that is 1,98,000 is the additional expense incurred is given. And it is also said that 1,56,000 is covered, thereby meaning that is actually insured and the balance will be uninsured. Okay, and we can only deal with the standing charges with respect to that. We'll not be covering the uninsured, the variable cost. So it is nothing but these 1,98,000 is only regarding the additional expense incurred, and of which 1,56,000 is insured and the balance is uninsured. Okay, is the basic data done, everyone? Okay, Alina, fine, good. Yes, fine, perfect. So I guess we can proceed with the rest. Note number 1 is done. Now our steps. Our first one will be computation of loss of stock. Okay, computation of loss of stock. I'll take another page for that. Computation of loss of stock, for which you will have to prepare the memorandum trading account, and obviously yes, the table should have table headings. Memorandum trading account. And for which period will we be preparing that? It will be from 1/4/2011 to 36/2011 will be the period of memorandum trading account. Yes, you will have your opening stock, purchases. You will need your manufacturing expenses. You will have your wages here. You will have your sales, your closing stock. Opening stock, you can get it from the previous year's trading P&L. So it will be the closing stock of the previous year, which will be the opening stock this year. 1,85,000 will be the opening stock. Purchases is given in the question. Okay, sales is 3,36,000, 2,14,000 is the purchases. See, everybody, I'll work this out and only then you take this up. Okay, wages is 51,000. And manufacturing expenses. Okay, so GP percentage, you will have to compute the GP percentage, and only then you will be able to compute the GP amount. GP percentage will be a working note to this. GP divided by sales into 100. GP will be 3 lakh of the previous year and 12 lakh into 100 you get the GP percentage, and to that you see there's an increase of that was the 5 percentage on GP, right? GP was expected to increase by 5 percentage. Okay, plus 5 percentage you get the GP. I want you to compute, and then you apply the GP percentage here. You will be and finally you will be able to balance out the closing stock. Everyone, do this. Take your time, come up with the answer. I want the closing stock figure. Okay, and these are the steps involved. Okay, do this, everyone. Okay, complete this up. Come up with closing stock figures. 2,26,800 is perfectly fine. So we have the as 2,26,800. 2,26,800 is the closing stock. Good. Yes, Joel. I hope everyone is drawing with pen and pencil scale, using a pencil scale, everything, and keep it properly. Your notes, it should be neat. Okay? Huh. Yes, Ria. Closing stock is 2,26,800. Yes, Anandu. Good. Good, good. Okay. So I guess how many more to come? Yeah. People are there to complete. Varun, Anu, 2,26,000. Yes, Prina. Take your time. Not an issue. Take your time and come up with the closing stock. Yes, good. All done? If anyone is yet to complete, please drop a message or else I'll proceed with the next. Anyone to complete? I guess everyone is done with me. All right. Okay. So let's see for the policy amount and things. Okay. The question already says that there is no average clause applicable. So let's see how it happens. Policy amount is 2,10,000. We've already marked it in the question. Policy amount is 2,10,000. And whereas the closing stock is 2,26,800. Question does not specify about any salvage value. So closing stock is 2,26,800. So you tell me, how much will be the claim amount? Can we claim 2,26,800? Because that is our loss, right? So can we claim that? Drop a message. Is the claim amount 2,26,800? Is that the claim? Because you cannot apply average clause. That is not required. So you tell me, what is the claim amount here? What is the amount that you can claim? 2,10,000. Yes, Harshita. 2,10,000. Yeah, exactly correct. Why? Because you have taken a policy only for 2,10,000. And then how can you claim an amount more than that? Okay. So even if your closing stock is 2,26,800, okay, you will have to limit it to 2,10,000. And you will be getting the entire 2,10,000. Even though the amount is lower, you don't have to apply average clause because the question clearly states that average clause is not required. Okay. So how much you will have to write a concluding line for that. Policy amount than the closing stock claim is to be restricted to policy amount. Okay. Hence, claim for loss of stock is equal to 2,10,000. There we go. Okay. Take this down, everyone. Take this note again and drop a message. Yes, there we go. Done. Anu, please don't scribble it out. I want the notes to be neat. Please take that. Okay, seriously. Yes, Anantu. Bagan. Harshita. Obviously, GPAT is required. It will be there in the upcoming part because GPAT will be required in the loss of profit session, right? It's not here. We have done only with the first part, the loss of stock part. Okay. The second part is yet to come. GPAT is required. All right, all done. Good. Okay. So the next part, which is computation of loss of profit. Okay. So let's see computation of loss of profit. Okay, loss of profit, computation of loss of profit. Yes. So back to our normal procedures, right? So what was that? Step 1, computation of short sales. Computation of short sales. Okay. So how do we do that? What is the standard turnover? You will have to do the plus or minus trend adjustment, and then you get the adjusted standard turnover. From that, you will have to reduce the actual turnover so that you get your short sales. Now let's dig each and every point. Standard turnover. Let's see if it is given in the question. Okay, standard turnover. See, before that, the disrupted period is, what is the disrupted period? The fire happened on 1st July 2011. Okay, so the actual turnover will be from 1st July 2011 to 3 months is a disrupted period. So July, August, September. 30th September 2011 is the actual turnover period. Okay, first July 2011 to 30th of September. So standard turnover just 1 year before, 1st of July 2010 to 30th of September 2010. Okay, so let's see the figures. The sales figures are given straight. Listen. Okay, here from 1st 4 2010 to 36 2010, the data is given from 1st July 2010 to 30th of September 2010, and this is the one we were looking for. 3,20,000. 3,20,000. We'll have to do the trend adjustment. Let's see. Keep that for pending. Actual turnover from 1st July 2011 to 30th June 30th September 2011. It is 48,000. Okay. And now you will have to compute the trend. Okay, which will be a working note to this. Trend adjustment, 10 percentage. See, listen. The data for 1 for 2010 to 36 2010 is given to you. Okay. 1 for 2010. Okay. 12 percentage. Yes, Shruti. Good. 1 for 2010 to 36 2010 data is given to you as 3 lakh, and the turnover from 1 for 2011 to 36 2011 you can pull it from the trading account, okay, which is 12 lakh into 3 by 12, which happens to be 3 lakh 36,000, and hence the percentage will be 12 percentage. Okay. Okay, 12 percentage is a trend which you will have to apply here. Trend adjustment, 12 percentage is the amount you will have to apply here, and then you get your short sales. So use your calculators, everyone, and compute the answer. Compute the short sales, everyone. Yes, shoot out. All other things are there in the board, readily available. Okay, 12 percentage. Compute the short sales. Shoot, shoot. Shoot out the answers. Three lakh 10,400. Yes. Is the short sales? Yes, they become. Ria, Joel. Everybody, take your time. Come up with answers. Three lakh 10,400 is the short sales. Everybody respond. Bargain. Everyone, I want the response from everyone. Yes, Thomas, Donna, Joel, Devika, Ria, Anandu, Anu, Bargain. Yes, you have already done. Varun, Preena, Shruti. Everybody in loop? Have I missed out anyone? I guess everyone has come up with answers, right? Huh. So shall I proceed? Okay. Madhura, George, Harshita, Sandra, Savrab. Savrab, actually, I've not seen any of your messages, I guess. Are you in loop? Yes. Okay, Harshita. Others? Okay, Madhura, fine. Yes, and Savrab, yes, George, good. So if you need time, do let me know, okay? Because I don't want your pages to be empty. So do let me know. We'll give you sufficient time. No, not an issue. You take your time, relax, and then do it. Okay. Okay, Savrab, good. All right. Okay, so we'll proceed with the next. So we have computed short sales, and the next will be step 2 will be computation of additional expense. Okay. This is our step 2, wherein point A will be the actual, which we have already written it up, which is 1,98,000. And for the second one, it's a formula, which is actual into GPAT whole divided by GPAT plus uninsured. Uninsured also we have already noted it up in the earlier step. Uninsured standing charge. In the basic data, we have written uninsured standing charge as 42,000. Okay, so just note that down here, 42,000. Okay, so you will have to compute GPAT, and next one is GP percentage, which is your turnover of. We'll go with the second assumption, that is the entire turnover is out of this profit. I mean the entire turnover is because of this additional expense. Into you will have to apply the GP percentage. Okay, and we'll be taking the least of these three. So the task remaining for you now is one is GPAT, and the other one obviously once you compute GP percentage, you will be able to get the GPAT. So after this, leave some space there. Leave some space there. And then you start with your working notes. Working notes. Working note number 1. You will have to compute GP percentage. So GP will be nothing but net profit plus insured standing charges whole divided by turnover into 100. Okay. Okay, Harshita. Good. Okay, so the figures you'll be pulling it up. And then it is said in the question that there's an increase of 5% in GP that is expected. And so that you get the GP percentage. Okay. Compute that. That is working note number 1. Now, working note number 2 will be adjusted annual turnover. Okay, adjusted annual turnover. Yes, Shruti, 3,09,120 as the GPAT that you got, which is exactly correct. Okay, so adjusted annual turnover. Okay, so listen, the annual turnover. Firstly, you'll have to compute the annual turnover. Okay, so annual turnover will be for the period 1/4/2010 to 36/2010. Sorry, it will be 11. Okay, do one thing, everyone. Compute the GP percentage, and then we'll proceed with the rest. Compute the GP percentage, come up with GP percentage, and then we'll do GP adjusted annual turnover. GP percentage, 23%. Everybody, come up with answer. 23%. Okay, all done. Post messages, everyone. Everybody done. Okay, I know. Fine. Good. Trina, Saurav, Bagan, George, all done. Okay, fine. So listen. So we'll go with the working note number 2. Adjusted annual turnover. Okay, so for that, the period will be okay. Only for the previous years, you will have to do a trend adjustment. For the current year, it is already trend adjusted, so you don't have to do that. This is the adjusted annual turnover. And so GPAT will be 13,44,000 into 23 percentage, which will be 3,09,120. Complete this, everyone. GPAT. Once you're done, let me know. Compute GPAT. Let me know if you're done with this. Okay, Anandu. Yes, Devika. Fine. Varun, Savrab, Bagin, Joel, Ria, Madhura, Anu. Okay, fine. So everybody done with this. We have computed GPAT. So back to our initial process. Once we get the GPAT, you will be able to compute this. So come up with the next answer. Yes, compute the additional and let me know the least of the three. Okay, fine. Good, Shruti. Good going. Haha, Shruti, you have come up with the claim amount as well. Good. Yes, 11,040. Final, yes. You will have to take the least of three. 1,98,000, 1,74,315 in picture, 11,040 in picture, and the least of three. Okay, the least of three, 11,040 will be your additional expense. Let me know if anyone is yet to complete. Give a message regarding that. All done. Post updates. Post updates, everybody, just to keep track of it. Yes, Thomas, good. Devika, Joel, Anu, Ria, Bagin, Saurav. Yes, yes. Okay, fine. So we're done with our step two as well. Now over to step three. Step three, computation of claim amounts. Okay, step three is computation of claim amounts. Okay, now the next part, let's see how it is. GP percentage on short sales. We have short sales in hand, we have GP percentage, so you can compute that. Okay, now the next one is additional expense. We have computed that as well. Additional expense. About savings, nothing is mentioned in the question. Minus savings, but you keep that also in your answer. Even if it is nil, you can mark it as nil so that you get your claim before average clause. Average clause. Okay, compute this. Compute this, everybody. Compute the answer. Give me the answer for this. Claim before average clause. How much is it? Here actually it is mentioned in the question that you don't have to apply average clause. Okay. Okay. Yes. 82,432. Perfect. Now, students, let me know if we have to apply average clause here. Is it required? No. The question clearly states, so we don't have to apply. So, how much is the policy amount which is stated in the question? Date of fire. See, date of fire is 1st July 2011. So exactly 1 year before that is what we need. So it will be like for your annual turnover 1/7/2010 to 36/2011 is the data that you need. So now we'll have to pull out figures for that from 1/7/2010 to 31st of December 2010, and then you will have to take it from 1st January 2011 to 30 June 2011 is the data that you need. Okay, so for this, all right. Okay. All right. From this, you are reducing for 2010 to 36 2010, which is given in the question as 3 lakh. So it will be 9 lakh, which means this is the turnover from 1st July 2010 to 31st of March 2010. See, Harshita, for the previous year, okay, 2011, previous year, 1st April 2010 to 31st of March 2011, the turnover is 12 lakh. So from that, you remove the first 3 months because you just have to start from 1st of July. So you remove the first 3 months, which is April, May, and June. You remove that, which is 3 lakh, which is given in the question over here. It is given as 3 lakh. So you remove that, so you get it as 9 lakh. So 9 lakh will be the turnover from 1st of July to 31st. When it is. Okay, here it is 11. Okay. 2011. You get it? Okay. Now the pending period. So from the period is this. So along with that, you will have to add the turnover from 1st 11 to 30th of June 2011, which is again given to you. Okay, to this, obviously, you will have to do the trend adjustment part. Trend. And the one for 2011, it is mentioned over here. The sales as 3,36,000. Okay, it is over here. 3,36,000 is given. Okay. So you just have to add that. Is that point clear? Harshita, I'll explain it once more. The previous year, 2010-11 period is given. From that, the first 3 months you eliminate because that is given in the question. Yes, Harshita, good. Once more, but the first 3 months you remove so that you get from 1st of July 2011 to 31st of March 2011. And then to that, you add from 1st April to 30th of June, which is also given to you in the question. Okay, so that you get your annual turnover. Yes, that's it. Okay, so Harshita is also fine with that. Anyone else? Anyone else? Any doubts? Feel free to ask. You're doing really good, students. Okay. All cool. Everyone, message. Do message. Keep messaging. All done. Everyone. You got the loss of profit as 82,432. Okay. So the final answer of loss of profit will be 82,432, and this is our final answer. Okay. Yes, Thomas, good. Joel, all in track. Yes, Varun. Yes, George. Sabrab. Okay, fine. So over to the next question. Okay. Now the question one part is done. Now let's see to the question. Next question, question two. Okay. This is the next question that we have to deal with. Second question. Okay. Fine. Listen. Okay. And this is May 2019 question, which came for 10 marks. See, now you're telling me you find it easy to answer the previous exam questions also, right? Yes or no? Give me a feedback, right? The earlier one was 16 marks. So you have 16 marks in your pocket. And the one that we are going to do is 10-mark questions. So all these past exam questions are also the ones which we have actually done with. Okay. So everyone, cool with this? Fine. Okay. So keep track of the past exam questions also. Okay. I'll be making you do a few questions in class. The others download the question papers and do that. Obviously, I'll be checking your working notes as well once we resume. Okay. So yes, question two. Let's read out the question. Let's make it up. Okay. Fire occurred in the premises of Messrs. Bright on 25th of May 2017. Thus, as the date of fire. As a result of fire, sales were adversely affected up to 30th of September 2017. So, working note number one, basic data. Okay, basic data. Disrupted period. Okay, disrupted period as from 25th May 2017 to 30th of September 2017. Now, the loss of profit policy. Okay, the policy amount is 3,50,000. Okay, the policy amount is given to you in the question. Policy amount is 3,50,000, having indemnity period of 5 months. Okay, well, 25/5 to 30th of September, well, within a period of 5 months. Okay, now there is an upward trend of 10 percentage seen. Okay, so 10 percentage increasing trend. Okay, fine. Percentage increase in trend. So this is for trend adjustment. Additional expense is 30,000. 30,000 is given as additional expense. Here we have the savings. The firm, there was a saving of 5,000 for past two or three questions. We have been missing this figure. Back in picture, savings in insured standing charges as 5,000. Now we have the actual turnover here. Okay, yes, this is the actual turnover. Exactly the same year or the same period in the previous year. 6 lakh as the standard turnover. Okay, we have the standard turnover here. We have the net profit, insured standing charges, total standing charges. So there makes the requirement for our step C, which is uninsured total standing charge, happens to be 3 lakh and 1,75,000 is the insured standing charges. So obviously 1,25,000 happens to be our uninsured standing charges. Okay, fine. Now turnover for previous year is given. Now one more turnover data is given from 25th of May 2016 to 24th of May 2017. Let's see why that is there. 14 lakh. Let's see to that. What will be that? 25th of May 2016 to 24th of May 2017. That will be our annual turnover. Okay. So you will have to compute the loss of profit claim amount, assuming the entire sales is was due to additional expense. Okay. So this is it. Okay. This was a figure here which we computed. Okay. So everybody just note this down. Okay. Take down this basic data and after that drop a message. Okay, basic data, drop a message. Done. Good going. See, it was a 10-mark question and very recent attempt, May 2019. Just see how easy it is, okay? Build your confidence. It is definitely possible, students. Okay? All right. So that is it with working note 1. And next is our steps. Step 1 is short sales. Step 1, short sales. We need standard turnover. We have that. Yes or no? Here in the question, we have already given standard turnover plus or minus trend, which we'll be doing. I'm not going to do it. Just straight away given in the question. You get adjusted standard turnover. Okay. And from that, you reduce the actual turnover. Well, that is also in the question. Actual turnover, everything is there in the question. See it over here. The standard turnover, actual turnover, the percentage increase, all these figures are there. Standard turnover is 6 lakh, 10 percentage, and the actual will be 1,75,000. You get your short sales. Compute that, everyone. Compute the short sales. Give me the answer, short sales. How much is it? How much is the short sales? Step 1, very simple. 4,85,000. Yes, perfect. 4,85,000. Good. 4,85,000 as the short sales. Okay. All done? Very simple, right? Very easy. So easy to fetch 10 marks where every mark counts. Okay. So we are done with short sales. 4,85,000 is the answer. And over to the next. Okay, now step 2. Step 2 is additional expense. Additional expense, okay. So for additional expense, what are the usual scenario? The actual expense, which we have somewhere over here. Where was that? The actual expense. Yes, here it is. 30,000. The next one, the formula based. Okay, so 30,000 into GPAT divided by GPAT plus uninsured standing charges. Okay, you have the answer for that, which is 1,25,000. We've already done that. 1,25,000. Okay, so now what you will be doing, you will be computing the GPAT. Yes, I'll give you time. Don't do it now. I'll give you time. And point C is like, see, it is given in the question that the entire sales is due to additional expense. The entire sales is due to additional expense. So to the actual turnover of 1,75,000, you will have to apply the GP percentage. Okay, fine. So come up with answers. Compute GPAT first. Compute GPAT, and then we'll proceed with the rest. Okay, fine. Okay, compute the GPAT. Give me the answer. Compute GPAT, everybody. Tell me the answer for GPAT. Message everybody. Okay, you have two plus one step. Actually, you'll have to compute GP percentage. You'll have to compute adjusted annual turnover, and then apply GP percentage on adjusted annual turnover. You will get your GPAT. Make it fast. Yes, calculators. Using calculators. Facing any trouble? Anyone? GPAT is 3,85,000. Good. 3,85,000 is the GPAT. Fine. Perfect. Okay. GPAT is 3,85,000, and the last one will be 43,750. Take your time, everyone. Not an issue. Take your time. Okay. Anandu, Shruti, Shankar, Ria. Yes, Joel. All good? All cool? Preena, Varun, Devika. Good to see you all coming up with answers. Too good. Too good. Okay. Bargain, yes. Okay. How easy it is, right? To score 10 marks. Okay, fine. All right. So back to our step 2. Anyone pending actually? Anyone? Anyone pending? Yes. Devika, Preena, fine. Anyone else? Everybody responds. Everyone. Sandra? Thomas? Joel? George? Donna? Devika? Everybody keep responding. Be in the loop. Yes, Joel, George, Thomas, Harshita. Yes, be in loop. Keep responding. If you have not completed, please do respond that as well. Because or else, I'll not be able to keep a track of it. Okay, so if not completed, please do message that also. Not an issue here. Okay, all right. So back to this additional expenses. Step 2. Okay, Thomas. All done. So we'll move to the next question. Okay. So, anyways, I'll do one thing this way. Okay. I'm skipping out question number 3 because it will take pretty long. So I'll deal with question number 4 now. Okay. We are dealing with question number 4. Okay, fine. See, this is actually a revision of what we have done. The loss of stock 1, May 2012. This is RTP question. Okay, not a past exam question, but this is an RTP question. But this has an additional adjustment which you have actually not seen. Okay, fine. So we are moving to the question number 4. Okay, I repeat, question number 4 is the one that we are dealing with. Question 3, yes, I've skipped it. Question 3 and 5 we have pending. Yes, we'll see based on time. Okay, all right. So listen, question 4, let's read and analyze that. The premises of Agni Limited caught fire on 22nd January 2011. So we have the date of fire here. This is the date of fire. Stock was damaged, yes. The firm makes accounts up to 31st March each year, so they are following the April-March year and not the calendar year. On 31st March 2010, the stock at cost was, okay, we'll note it down. Okay, working note 1, basic data. Basic data. Okay. Note 1, basic data. Date of fire. And 2011. And next one, the turnover. Am I audible, everyone? Audible, right? Okay, yes. So we'll continue. Okay. All right. 31st March 2010, the stock is 13,27,200. And next one, the stock as on 31st March 2009 is 9,62,200. You will have to brush up the points that we have learned before. We'll see anyways. Okay. Purchases from 1st April 2010 to date of fire. Okay. Purchases. 1st April 2010 to date of fire. Okay. Purchases from 1st April to date of fire is 34,82,700. And for the previous year, 2009-10 data is also given. Yes. Purchases, two purchases data are given. One is 34,82,700 and the other one is 45,25,000. And the corresponding sales figure, the respective sales figures are also given, which is 49,17,000 and 52 lakh. And the further additional informations are given. Okay, rate of GP is constant. So what are we asked to compute? Okay, listen, the other data we'll see in the go. Calculate the stock in hand on the data file. See, listen, usually we prepare the memorandum trading account to compute the stock as on the data file. But if we have to compute the memorandum, if we have to prepare the memorandum trading account, in order to compute the closing stock, all of the figures should be there, right? The opening stock, the purchases, the wages, manufacturing expenses, if it is there, the sales and the GP amount should be there. But in this question, the GP percentage is not straight away given. Okay? The GP percentage is not straight away given to you in the question. So you will have to compute the GP percentage. In order to compute the GP percentage, what we'll have to do? We'll have to prepare the previous year's trading account, okay? Because question says that the GP percentage is constant. So what was the GP percentage in the previous year? Same will be the GP percentage in the current year also, okay? So GP percentage, in order to compute GP percentage, you will have to prepare the trading account of previous year. Yes, there we go. So this is our working note number one. Okay, working note number one. Trading account of 2009-10. Okay, we'll have to prepare the trading account of 2009-10. Okay. There we go. We'll need the opening stock. I'll just write down the figures, I mean the main points, and afterwards we'll take it up. Sales, closing stock, and here our missing figure will be GP because our intention is to compute GP percentage, right? Okay, so we'll check for the figures here. Opening stock is 9,62,200. Here it is. Here we go. 9,62,200. Okay, we have that here. Purchases is 45,25,000. Here we have that as well. Wages, it is not mentioned in the question, so you don't have to write that. Sales, it is 52 lakh. We have the sales figure here. Sales is also there. And the closing stock is also given as 13,27,200. Here we have the closing stock. Okay, so you just have to balance it up. You will get a GP amount, and afterwards, what you will be doing is you will be computing the GP percentage. So GP percentage will be GP by sales into 100. Yes, shoot the answers, everybody. Compute the GP percentage. Everyone, come up with the answer. Compute the GP percentage. Use a scale, pencil, draw the columns, and give me the answer. Okay? 20%. Good going, Ashita. Yes, Shruti. Everybody in pace, good. Yes, others. Not an issue. Take your time. Keep writing. Compute the answer. Use your calculators. Increase the speed. Okay, others. Post your answers. Give me updates. Yes, Ria, 20. Yes, Prerna. Yes, good. Anandu, Varun, Anu.
Yes, Bagin, Devika, Joel, Donna. You're taking time and computing it good. I'm glad. Okay. I guess. Okay. Fine. Yes, Thomas. Okay. So, shall we have got the GP percentage? Okay. Now, once we are done with the GP percentage, we'll have to prepare the memorandum trading account. Working note number 2, memorandum trading account. Be with me, everyone. I'll prepare this first. Okay, keep your pens down. Just keep listening. And see, listen. The date of file is 22/1/2011. Okay, 31st March 2011. Sorry, 2010 was the last date that we prepared. So from that, you will have to prepare this. The memorandum trading account will be from 1/4/2010 to 22/1/2011. Okay, this is the period that we are preparing our memorandum trading account. So we have the open-end stock, which you can pull it from the previous trading account, which is 13,27,200. And then you have the purchases. I'm just taking up the figure straight from question, okay? The purchases is 34,82,700. We'll see for the adjustments. 34,82,700. Now listen, everybody. See, in July 2010, goods costing rupees 1 lakh were given. Okay, rupees 1 lakh were given away for advertisement purposes. No entries have been made in this in the books. So 1 lakh is given out of. See, we purchased those goods. We purchased 1 lakh, and this 1 lakh we have given for advertisement. So is that any more available for further sales? It is not available for further sales, right? So you will have to reduce this amount from purchases, and this will be treated as an indirect expense in your P&L. Okay, I repeat, advertisement expense. It is the amount is taken up from the purchases, and that journal entry is not yet made. So you will have to reduce it from the purchases, and you will have to charge it in the P&L. But for now, you just have to prepare the trading account. So I'm doing only that part. I'm reducing the 1 lakh. Okay, I'm reducing 1 lakh from here. All right. Okay, so I'll get the effective purchase. Now over to sales. Sales, it is given in the question as 49,17,000. This is the sales which is given in the question. Now let's see, there are the adjustments more. Okay. During 2011, a clerk had misappropriated unrecorded cash sales. Okay, a clerk had misappropriated unrecorded cash sales. It is estimated that the defalcation averaged 2,000 per week from 1st April 2010 until the clerk was dismissed up to 18th August 2010. Okay, students, so we have an issue there. You know, our few sales, it was taken up by the clerk. So that is actually not our sales. We cannot treat, or rather, it was taken up, so that needs to be considered over here. So listen, so the period is 1/4/2000, okay, 10 to 18th August 2010 is the period wherein he was just cheating us. The clerk was taking up the sales. So if we check this, okay, this is a total of 140 days. 140 days meaning we have 20 weeks. Okay, do count the number of days. 140 days we have. We have 20 weeks for that. And so for each week it is said it is 2000. Okay, so 2000 into 20, you get it as 40,000 will be our unrecorded sales. Okay. Okay. 1/4 2010 to 18/8 2010. It is a total of 140 days, thereby meaning we have a total of 20 weeks in hand, and he cheated us for these 20 weeks. So every week an amount of 2,000 was his profit. Our loss, unfortunately. So 40,000 is the sales which actually didn't come into our pocket. Okay, so that will also have to add with this. So 49,57,000 is the actual sales. Because see, I'll tell you the point here. The point is, this is actually not our sales. We did not make the sale. But our intention here is to compute the closing stock, yes or no? Okay, our intention is solely to compute the closing stock. If we have to compute the closing stock, all of the figures, the opening stock, the purchases, the sales, the GP, every figure should be correct. And only if all these figures are correct, you will be getting your correct closing stock, the physical closing stock as on that date. Though this is not our actual sale, but still, these goods are not in our go down. Yes or no? So you have to remove that good from our go down. How do we remove that? You record the sales, you record the GP also. So that gets automatically eliminated. Okay? That is the reason why I've taken it up. So I added the sales. I agree, I totally agree that is not our sales. Okay, but then in order to compute the actual closing stock, you will have to remove that from our sales. Okay, so how, or rather from the stock. How do we remove from that from the stock? You take up with the sales and you take up with the GP percentage. So automatically that gets eliminated. Okay, so we have the sales here, opening stock here, purchases here. GP percentage you have already computed. Okay, so you apply the GP percentage on the sales, you get the GP, and then you are here with the closing stock. All right, so students, speed up, compute the closing stock. Now I want you to compute the closing stock. Yes, make it fast. Okay, it is 7,44,300. Yes, perfectly fine. 7,44,300 is the closing stock. Good. Yes, George. Others? Yes. Others also? Yes, Preena. Yes, Saurabh, Bagan, Joel. So we have got the closing stock as of the date of fire, which is 7,44,300. Yes, Devika, good. Alina, fine. Everyone? Bagan, Joel. Amazing, guys, amazing. Yes, Thomas. Yes, others. Take your time. Come up with answers, but is it unrecorded sales portion clear for everyone? If not, please let me know. I'll explain it again. Anybody needs clarity on that? All done? How many more? Like, you have to receive many messages, I guess. Are you counting the number of days? Keep counting, not an issue. Keep counting. Okay, listen. Yes, Thomas. I'll explain. See. The 40,000, okay, the 40,000 is actually not our sale. I agree. What is our intention? We have to compute the closing stock, right? We have to compute the closing stock as on the date of file. If we have to compute the closing stock, this amount of 40,000 is not our sale, but somebody has taken. I had 10,000 worth stock. I did not make any sale. Let me make it that way. One of my clerk, he took away some amount of 2,000. Okay, 2,000 worth stock he had taken. But I didn't know this. So in my books, the closing stock will be reflecting as 10,000. But whereas in fact, in figures, the actual closing stock is only 8,000. Okay. So what I did here is the sales regarding to this 2,000. That sales, I'll be taking it with sales amount, and the GP percentage will be there in the GP amount, so that the 2,000's impact is automatically eliminated. Okay, because this amount should not be there in your closing stock. You have to remove that totally. Okay, in order to remove that, since though it is not my sale, since that is not in our stock, you will have to remove that, and henceforth I've taken the sales part and the GP percentage. So sales minus GP, it is the cost which is being reflected, and so effectively you are removing the cost. Are you getting it, Thomas? Okay, sales here and GP here. You are reducing sales minus GP, you get the cost, and you are eliminating the cost from the trading account. Okay, so effectively that is reflected. Okay, all done? Okay, can we reduce the cost of misappropriated sales from the purchases instead? No, actually, because uh, from the purchases, see, it is clearly said in the question, 2,000 is the sales figure that is being misappropriated. So add up the sales and then remove it from GP. That is the correct method. Okay? All right. Yes, Shruti, fine. Good. Anyone else to give a thumbs up? All done? Yes. I guess, yes, we can. We'll just brush up what we have learned for the day. Okay? And then we'll see. More or less, the insurance chapter is done with. We just have two more questions pending, which we'll be doing it in the next class. Okay? Apart from that, the same steps here. The only adjustments that we saw today, we'll see. Okay, for today's class, it was like starting with the first one. Okay, where was that? Okay, so see. Okay, the total 10 lakhs, the previous year's turnover, current year turnover, we had to split that because it was clearly mentioned in the question that there is an increase of 15%. So we had to remove that. The 10 lakh we had to apportion between previous year and current year. That was one task which we had to deal with in the current today's session. And then how to compute the total standing charge if it is not given in the question. If the trading account is given in the question, obviously the fixed cost will give you the standing charges, which you can take from the administrative and the finance charges. You get the total standing charges. Okay, that was one adjustment that we saw. And then we also found out that if the policy amount, okay, if the policy or rather the claim amount, the loss is lower, if the GPAT is lower than the policy amount, then the yes, Harshita. Okay, fine. Okay. Why is it that when total annual turnover is given, we add trend to whole amount, and when we calculate, okay, fine, perfect. The issue is See, if the question says annual turnover is this much, okay, question says annual turnover. Let's say we have 2 years, 2010 and 2011, and annual turnover will be clubbing the turnover for 2010 and 2011, right? So we have the turnover for 2010 and 11 clubbed together and said it is 10 lakh. Do we have sufficient data as respect to how much is the turnover for 2010 and how much is the turnover for 2011? So wherever the question clearly gives you the turnover between two different years separately, you will definitely have to apply the percentage trend, increase in the GP percentage trend only for the previous year. Okay. If the question does not give you clarity with respect to the previous year turnover and current year turnover, you have no other way out. Rather, you will be able to compute the trend only on the total amount. Okay, it is only because the question does not give you sufficient clarity regarding that. If the question says, whichever question be, if the annual turnover, if it is split between two parts, and you clearly have the data of previous year and you clearly have the data for current year, you will be applying the trend percentage only for the previous year and not for the current year. If the question does not give you sufficient data regarding that, you will be applying trend percentage on the overall amount. Is that clear, Harshita? Is that fine? Okay, fine, perfect. Okay, anyone else? I guess we are done with it. And then we saw another treatment regarding unrecorded sales, where we remove the sales and the profit. So effectively, the cost is being eliminated. Okay, that is also done. So that is pretty much about today's session. I guess everybody is okay with it. Any other queries to be asked? Anyone feel free to ask any other queries. Okay, just we'll just go through it. The doing the annual turnover and the adjusting, making the trend part on that, and then what else did we see? When the question does not provide details about the additional expenses, that is eliminated. We don't have to take that. That was a question where, see, that was also a previous question. Okay, the very latest year. That's giving 3-4 years. It was about, I guess, 10 or 12 marks question. Maybe in 18-19 attempt, 18 either 2018 or 2019 attempt, the same question was there with just figure changes. Okay, so keep a track of it. So when additional expenses data is not given, you don't have to use that. And then what else do we have? These all are easy. When the annual turnover is split between the previous year and current year, you can definitely apply the GP percentage on the previous year. You don't have to apply it for the current year. But if the annual turnover is given as one figure, you will have to apply the trend percentage on that figure only. Okay, and then it is like. All these are easy tasks. Okay, and yes, we prepared the memorandum trading account, and wherever necessary we also prepared the trading account. If the GP percentage was not given, we had to prepare the trading account and then to the memorandum trading account. Yes, pretty much about it. Just go through, just turn your pages, whatever you have written, turn your pages. Any doubts here and there, feel free to ask. Okay, yes, computation of claim, all that is fair enough. I guess yes, and if the uninsured standing charge is not given clearly in the question, what do? We take the total standing charge, you reduce the insured portion, you get the uninsured portion. Yes, and that is pretty much about it. Any point which you need clarity? Yes, unrecorded sales is one. Yes, that's it. Okay. And post your feedback. Was speed okay for you? Yes. Can you explain the last question? Trading account. Perfect. Not an issue. You want the trading account, Devika, or the memorandum trading account? Is it the trading account or memorandum trading account? Trading account. Okay. Trading account. See, we have opening stock. Okay. Listen, I'll explain the question. Okay. Listen. 9,62,200. The opening stock is 9,62,200. Okay. 9,62,200 is the opening stock which is given to you in question. And then we have the purchases given here. 45 lakh 25,000. Wages is not given in question. Eliminate that. Sales is 52 lakh, which is also given in the question. It is over here. 52 lakh sales is given. And the closing stock is also given as 13 lakh 27,200. Okay, so the difference you will be getting the GP amount. It is the balancing figure, which is 10 lakh 40,000. So 10 lakh 40,000 divided by 52 lakh into 100, you get the GP percentage. 20. Is this fine, Devika? Is this okay? Okay, good. So post your feedbacks. Was this fine? Was the class okay? Like, are you able to get hold of the speed, everything? Do I have to slow down a bit? Is anything of that kind required? Posting your feedbacks, yes. Okay, Shruti. All right, Alina. Okay, Preena. Good to know that. Yes, Anu, fine. Yes, Harshita. Devika, good. Thank you, Joel. Yes, Madra, Donna, Savrab, Ria. Thanks for your updates. Okay, Wagan, thank you. All right. Okay. Thank you all. Good. Thank you. Thank you, everyone. Okay. See you all the next class. Take care. Bye.